Rajiv Biswas joins me now to talk more about how emerging markets are reacting to the latest U.S. rate hike. He's Asia-Pacific Chief Economist at IHS Markit. And it's good to have you here. We just heard from Joel, and he's thrown out some of these numbers, and he ticked them off. They're rather alarming, and they're likely to get worse. He said inflation in Latin America's third largest economy, as you heard, more than 52%. That's the story of Argentina, but I imagine there are other countries struggling with an economic recovery because of COVID, a number of issues. This is just another shock to the system to deal with. Which countries do you think are going to be feeling the most pain here?
Well, there's certainly differentiation in emerging markets. So I think when we look at the broad spectrum of emerging markets around the world, there will be a very big spectrum of how investors look at different countries depending on their external account vulnerabilities, their foreign exchange reserves, their government deficits, and of course their growth outlook and inflation outlook. So taking all those into account, there's quite a different range of vulnerabilities amongst emerging markets. If we look at the Asia-Pacific region, there's some very strong and resilient economies, particularly led by China, and a number of the other East Asian economies are also in a very strong position. But elsewhere in the world, some of the big emerging markets do face challenges due to large external account difficulties and also high government debt levels. So some of the vulnerable countries, as already mentioned, Argentina, and then of course in the Middle East region, we have Turkey, which has had problems for several years. And when we see the Fed hiking rates, we're going to see, those countries that have the most vulnerabilities will be the ones who are potentially going to face additional problems with capital flight being a concern. So I think it really is a case of differentiation. In the Asia-Pacific region, several of the countries that are facing problems with external debt pipelines at the moment are Sri Lanka and Pakistan. But even some of the stronger economies like Philippines and India, which do have very strong foreign exchange reserves and have a relatively good economic outlook this year, are facing increasing concerns due to higher inflation pressures from commodity prices having increased quite substantially over the last 6 months. So they will also be watching very carefully the path of Fed rate hikes.
Yeah.
Because apart from the rate hike that we've already had, the Fed's also signaling potentially 6 more rate hikes this year. So that is going to put a lot of pressure on central banks, I think, in many emerging markets.
It's interesting, though, if you look at Latin American stocks right now and you use that as a litmus test, so far the initial reaction is positive. Do you expect that to continue? And I mean, how much worry is there kind of baked in at what you just described, the fact that there's more hikes in the horizon?
I think the Fed has signaled the process of the shift to monetary policy tightening very carefully. Financial markets have had a very long runway up to this point, and the Fed also signaled it's tapering long ahead. So the Fed has been very, very careful to signal this, and so financial markets had a long time to prepare for tapering and also for the first rate hike. There has been some increase now in expectations of the Fed for the number of additional rate hikes this year. So I think that could be a concern for some central banks. And if we look, for example, at the Hong Kong Monetary Authority, they have to follow the Fed because of the Hong Kong dollar pegged to the US dollar. So I think that, for example, is one point of concern for the Hong Kong economy this year, that they will need to be tightening monetary policy in lockstep with the Fed. And the Bank of Korea has also been already tightening ahead of the Fed. So we've already seen some moves by Asian central banks. But I think broadly around the world, we're going to see emerging market central banks shifting towards some tightening, partly due to their own recoveries from the pandemic as their economies start to emerge from a lot of the difficulties through the course of 2022. but also because they see inflation pressures globally are rising. One particular concern now that's emerged in the last month is higher food prices, particularly for wheat, for corn. And that's important for some emerging markets like Egypt, which are big importers of wheat. So I think all of these things are a complex mix for central banks, and we're going to see different levels of vulnerability depending on the external account strength. How strong are the foreign exchange reserves? How strong are external account balances? These are some of the key factors that will differentiate amongst the different emerging markets.
It's going to be fascinating to watch. Rajiv, thanks so much for your insights. Really appreciate it.